Welcome to the Market Analyzer Show. And in this show, we're going to discuss a very big topic, Bitcoin versus gold. And are the gold buyers rotating into Bitcoin? That is a very big question, as gold has come down some and Bitcoin coming up some. And obviously, in its all-time high, gold is still in its all-time high. It is receding a little bit. The big question is gold buyers rotating into Bitcoin? So from CNBC, we have Max Layton, Citi Global Head of Commodities Research, talking about this very question here. It's very, very interesting. So let's take a look here.
I mean, we just showed the charts there. Gold's been going down, Bitcoin's been going up. So I thought before the election, a lot of the rise of gold was just due to uncertainty over the election and geopolitics. Now that the election's been settled, why specifically are we seeing gold decline and Bitcoin rise up in your mind? I know you're not a Bitcoin analyst, but what's the thesis on gold at least?
Yeah, I think a lot of it is about Trump looking like he's going to have a red sweep, and lower deregulation or higher deregulation, lower tax environment has led money into equities, money into Bitcoin, and money out of gold. And on top of that, some part of gold's rally was momentum-based, algorithmic, machine buying, and some of that is coming out. And critical to the gold outlook in the very near term is just how much of that money's come out in terms of momentum sellers, and how much more is to come out in the very near term.
Okay. So, I know we're not on the gold standard anymore. The U.S. still does hold gold, but we also have a lot of other central banks buying gold. So is the idea of creating a crypto reserve, does that really threaten gold at all, especially when we have China buying so much gold and other central banks buying so much gold? Is that headline alone just a serious threat to gold in your mind?
I don't think it is in any way a threat to gold at all. I think the gold build out of reserves started in the middle of 2022 in quite a material way, and it has gone on since then, and it's got many, many more years to run, in our opinion.
Okay.
It's led by China, of course, but also a number of other countries across the rest of the world are building their reserves pretty aggressively.
Yeah, Fort Bitcoin doesn't roll off the tongue like Fort Knox. It just doesn't, Max. I want to go to some of the other metals. Silver, for example. We've all seen a big decline in silver. Silver rallied all year, partly due to its industrial applications, actually. Things like data centers, solar panels, electric vehicles. What's your thesis when it comes to silver going forward? Obviously, we've seen some pressure on the EV market here in the U.S., but globally it's still going. Do you have a price target for silver? Where do you see it going from here?
Sure. Yeah, so I mean, we think obviously we're having a pause in the bull market in gold and in silver, and that may continue for the next couple of weeks or so. But ultimately, the underlying drivers of both the gold and silver bull market, we think still in play. So the U.S. labor market's been slowing down for the past 2 years, very gradually, but it has been slowing down very clearly, and that's because interest rates are high. And you know what? They're still very high by historical standards, and they're well above neutral. And because of that, over time, you are going to have concern about asset price declines. Coming back to the fore over the next six to 9 months, and as that happens, people will be buying gold and silver to hedge those downside risks. The other big part of it is obviously the central bank side of things, and the energy transition led by China, which is driving a big deficit in the silver market and supporting higher highs and higher lows in silver.
Okay. So, a big thesis when it comes to silver. Very quickly, what's your outlook when it comes to copper? Copper also has a lot of industrial applications, also housing applications here in the U.S.
Yeah, look, I mean, medium term, we still think the copper outlook's pretty bullish, but hey, we've got to wait and see just how big these tariffs are. And while we wait and see how big the tariffs are going to be and the timing of them, we think copper's going to trade lower here. It's going to trade down to 8,500 in the next month or so, we think. Okay,
so you see a lower trade. I want to go to another area you're talking about. You just mentioned tariffs, so you're kind of leading me to my next question. Soft commodities. I thought it was interesting that you were actually had a lot of commentary when it came to soft commodities, things like corn, also soybeans. So how do tariffs play a part in that? China imports a lot of corn and soybeans from the U.S. They also import a lot of corn and things like that, and also pork from Brazil. We're also a big pork exporter to China. How does this story all play out? I mentioned this probably a couple days ago, maybe a week or so ago. China is actually the biggest pork importer in the world, and our U.S. farmers, they really depend on that trade of exporting pork to China.
Sure. I mean, ag's created a lot of attention during Trump's last term, and for all the reasons you mentioned. Overall, we're thinking that renewed trade tensions with China would be bearish for seed row crop prices, particularly soybeans, but also corn. It has the potential to strand robust U.S. harvest supplies, and on the other hand, it should support Brazilian prices for these commodities.